Most traders pay to get into a trade. On this one, I got paid to open it and then paid again to close it. 2 paydays on a single trade, about $900, fully closed and realized. Let me show you the real fills. It's on Arista Networks, a networking company riding the data center boom. The structure is my financed bull. I get paid to enter. I win whether the stock rises or dips. And this time I close the whole thing for a big gain. I'll prove every number with real screenshots. These are the exact trades I send my members in real time. I'll show you the real fill straight from my brokerage. No predictions, no price targets. I don't think anyone reliably calls where Arista goes next, but what I can do is I can show you how to structure a trade that pays you when you enter and wins in more than one direction. Because my whole job is to teach you to win when you're right, win when you're wrong, and never gamble. And stay till the very end. I'll show you the fully defined risk version. And even if you've never traded an option in your entire life, you'll understand exactly how this works. Here's the trade. I got paid $49 just to open it. Here's exactly what you're getting. The exact Arista Networks trade. A real fill, a real credit. How I got paid to enter and win whether it goes up or down. And at the end, I'm going to show you a defined risk version and the price I'd love to own Arista Networks at. First, why Arista Networks? Arista Networks, its ticker symbol is ANET, is one of the backbones of the AI buildout. The chips and the infrastructure, a huge chunk of what AI runs on. And while it's already run a long way, the question everyone has is, should I chase it here or should I wait? My answer isn't about prediction, it's about structure and discipline. Why I'm not just buying the shares. If I just buy the shares, I only win if the stock goes up, and I'm paying the full price today. Instead, I want to participate in the upside, get paid to wait, and also have a plan if the stock drops and pulls back. That's exactly what this option structure does. If you've never traded options before, here's the whole idea in 20 seconds. Selling a put just means that I agree to buy Arista Networks at a lower price, and I get paid cash today for agreeing to do so. It's exactly like placing a buy it on sale order below today's price, except you get paid to open the trade. If the stock never drops to my price, then I keep the cash. If it does, I own one of the best companies in the world on sale. That's the edge. Get paid to be patient instead of paying full price and just hoping that it goes up. The setup. My finance bull trade on Arista Networks. The opening trade, I bought a 155 call and I sold the 165 call. This is a call debit spread and it provides upside participation. Then I financed this trade by selling 2 of the 125 puts, only because I'd love to own Arista at 125, which is a steep discount from where it's currently trading at. The result, I opened the trade for a credit and I got paid $49 just to put this trade on. Most people pay when they buy a call, but I got paid to place mine. It's like walking into a casino and the casino pays you to sit down at the table. If Arista Networks goes up, my call spread profits, and I keep that opening credit no matter what happens. Here's the actual order. Straight from my brokerage. Look at the top. It filled for a credit. I got paid $49 just to put this Arista Networks trade on. Small credit, but the point is that I was paid to put on a call option. I wasn't charged for the call. Here's the trade. I was paid $49 just to open it. And I'm also going to show you the closing trade where we made around $900 in total. Remember, stay till the end and I'll show you how to run this with defined risk, plus the exact discount I'd love to buy Arista Networks at. But first, let me show you why this trade wins in more than one direction. Real talk, let me be precise. This is not a defined risk trade. These 2 puts are naked. I sell them on purpose, but only at a price where I'd be thrilled to own Arista Networks. Stay till the end. I'll show you the defined risk version. Then I got paid again to close it. 6 weeks later, Arista ran up. So I bought the call spread back. Look at the fill below. I closed it for an $877 credit. So I was paid $49 to open it, and then I was paid again $877 to close it. That's about $900 per one lot, paid both ways, fully realized. If I sold 5 of them instead of 1, then I would have made over $4,500 in profit. Quick, don't go anywhere. The defined risk version I promised you is about 90 seconds away. The exact same idea with strictly limited risk. But first, the one mistake that ruins this trade for most beginners, and it's not what you think. How this trade wins up, down, or sideways. Up, the one call spread profits, and I keep the credit. Down to 125, I own Arista Networks at my strike price, a price I chose because I'd be happy to own it, and I keep the original credit that I got when I opened the trade. Sideways, I just keep the credit. But I want to own the shares, and what if it keeps rising? Want to actually own Arista Networks? If it falls to my put strike, I actually do own it. Cheaper than today, and I still keep the original credit. Worried you'll miss a big AI run? My call spread profits as Arista Networks rises up to its cap, and I was paid to take the position. The only thing I give up is gains above that cap. For a company like Arista, a discount plus getting paid beats paying full price and hoping that the stock will continue upwards. Why getting paid to enter is the entire edge. Most traders pay a debit when they buy a call option, so they need to be right on direction and timing. I opened this trade for a credit, so time passing in a flat market, they both work for me. I don't need to predict, I need structure. That's the entire difference. The number one mistake that ruins this trade. This only works if you genuinely want to own the stock at your put strike. Selling puts on a company that you don't want to own equals gambling for premium. The discipline is the edge. Pick the company first, the strike second. Is this too good to be true? The honest risk. Real talk. The risk is that Arista Networks craters far below 125. Then I'm assigned at 125, forced to own it above the market price. That's the real loss, and it's not a bargain. That's why I only sell puts on companies I'd be happy to hold for years. No trade is risk-free. This one just pays me to take a risk I already wanted. This is the real account that these trades come from. Real, verified, not hype. You can see how our trade structure performs. In March 2026, when the market was down around 7 or 8%, we were only down less than 1%. And then when the market rebounded in April and May, we participated in the upside as well. Here's the real lesson. I'm not predicting Arista Networks. I structured a trade that wins more than one way, up, down, or sideways. I was just paid to participate. Win when you're right, win when you're wrong, never gamble. Okay, here's what I promised. First, if selling naked puts makes you nervous, you can turn this into a fully defined risk trade. Instead of just selling the put, sell one put and you buy a lower put. Now your downside is capped. You give up a little bit of premium, but you know your exact maximum risk. Second, the level. I sold the 125 puts because that's a price that I'd be thrilled to own Arista Networks at. A steep discount from where it trades today. If it falls there and I'm assigned, I'm not upset. I'm getting one of the best companies in the world on sale. That's the whole mindset. Only sell puts on companies you'd be lucky to own cheaper. Now, for the actual strike price that I would choose if I were to structure this as defined risk, instead of selling the 125, I would have sold the 140 and I would have bought the 100 put. What that does is it reduces my maximum loss to $40 a share, as opposed to when I sold naked puts with a strike price of 125, then I have $125 a downside. So again, if I was going to turn this into a defined risk trade, I would sell the 140 and I'd buy the $100 put, and I would still keep the call spread that I purchased at the same exact strike. Who's telling you this? I'm a former Wall Street investment banker, Ivy League graduate, and every trade I show is real and verified. These are the exact trades I send my members in real time. You can get them too. There's a 14-day trial. Link is in the description. Even if you've never traded options, start there. Want to see my actual results? Watch this video next. I show my actual trading statements. I'll add a card right now. That way you can click on it and watch this video. That's the trade. Pay to enter, a winner whether Arista Networks goes up or down, and a structure you can run on almost any great company. If you want every trade I make in real time, the link is below. And tell me in the comments which stock I should do this on next. Your pick could be the next video. Win when you're right, win when you're wrong, never gamble. See you in the next one.